Hello, thank you so much for joining us today. Happy Friday to you. I'm Marlon Bowling, your tour guide to the ag commodities. Well, it's heading toward the end of our week, and it has been a dreadful week when it comes to the grain trade. A lot of selling in the grain markets here over the last several days, taking out some technical support levels along the way. Let's see what happened in the overnight trade. And we'll take a look first at our quotes from bar chart on the corn. Now, on the corn market here overnight, we ended up a little bit higher, but man, it was an adventure. Every time I looked at it, and I actually checked the market several times during the overnight, and sometimes it would be showing corn a little higher, wheat a little higher, soybeans maybe a little lower. And then I would check it a couple hours later, and everything was fairly sharply lower. And now I see this morning, whereas we came across the finish line on the Globex market, you had the May corn a penny and a half higher at 6.13 and almost on the high of the evening trade after it got as low as 6.06 3/4. On the December contract, it was unchanged as we came across the finish line here at 5.53 and a half. Now it tested 5.50 overnight, got down to 5.50 3/4. But it did not take it out, so that could be important too. By the way, I checked the wire here just a moment ago as I came into the studio. I did not see any overnight flash export sales to talk about. So we're back to that old routine again. Now on soybeans, we had the soybeans chopping around overnight, and the May finished up at 15.05 and a half, and that would be down 5 1/4 cents from our close yesterday. Got as low as $14.98, so that was a concern as it went below $15 overnight. It had been as high as $15.15 and a half. We have the July contract showing a last trade that was 5 cents lower at $14.93 3/4. And I do want to check out the new crop November contract. It showed a last trade 4 1/4 lower at $13.55 3/4. And then the wheat market, it was all over the place last night. And the May contract in Chicago ended up 2 1/4 higher at 6.68 after it had been as low as 6.61. So kind of a small miracle there, fairly close to the high of the overnight trade. Kansas City wheat had May 2 3/4 higher at 7.80. That would be about 7.5 cents off of its overnight low. Minneapolis spring wheat up just a half at 8.18. So very quiet right there. Let's bring in Brian Hoops, president of Midwest Market Solutions, and discuss. So this week has not been real stellar when it comes to the ag commodity trade from the producer's perspective here, Brian. I'm sure you're probably fielding a lot of phone calls about, what do I do now? I mean, you got the markets doing all these gyrations this week and doing some steep selling. I'm sure farmers are wondering if they missed the boat now.
Yeah, it's a pretty topical question, Marlon, about what to do if they still have inventory or if they've re-owned it. Do they hang on to it? The market's had some decent fundamental news this week in the form of USDA report that cut ending stocks and production numbers in Argentina, some private estimates that cut to production even further, and this is for corn and soybeans in that country. We've had some decent export business, but the market's really failed to respond to any of those positive fundamentals as it's been more of a technical selling type market. And so maybe we need to really look at what the technicals are doing to give us indication if this is going to continue. And, the pattern has been sell off during the day, a little bit of recovery in the overnight, and then the funds come back in during the day and slam it once again. And so the close, I think, is going to be very important for the session today and to see if we are getting close to that technical bottom or we can see any type of a recovery. We made new lows overnight and we recovered into the morning hours to close near the highs, especially in wheat and corn. Now, if we can absorb the fund selling that comes at us in the morning right after the opening in here and close higher for the day, that's going to be on the charts anyway. That's going to be some sort of a hook reversal or some sort of reversal. Right. It should be enough to really stem that selling pressure, and and maybe we can see some sort of a recovery in here. Now, we've done a lot of technical damage. We're extremely oversold.
Well, that takes even added significance into the situation, depending on how we have a week-over-week close. Is it going to be higher or lower, and by how much? So that could have a big impact on the trade too. Brian will come back in a moment, and we'll talk about our livestock trade here on a Friday when we come back. Well, thanks again for joining us here on the Market Day Report. I'm Marlon Bowling with you, and I'm pleased to be talking with Brian Hoops, president of Midwest Market Solutions. I want to talk now about our livestock trade. And Brian, if I saw correctly on the wire overnight, we did have a little bit of cash cattle trade. Is that right?
Yeah, I don't think it's enough to really say this is the market for the week, and we're going to see additional trade today and probably this afternoon. But 165 was bid and initially was passed in Kansas, and then we did have some trade develop at that level. So that's a fully steady market. Now the futures are trading below that level, and if the feedlots get their way and get the 166 today, we're going to be over $1 cheaper in the April futures compared to that cash trade. So we need to probably narrow that basis up a little bit. And usually the pattern again has been for a rally on Friday and again on Monday in the cattle market, and then we sell off during the middle of the week as we wait for that cash trade to develop. So we'll see if that pattern holds. The bid ask looks for about a 15-20 cent higher opening in the cattle market this morning. And I think if we see more cash trade develop as the day goes on, that hedge lifting is going to give us some strength in the cattle futures by the closing bell.
You know, I had to wonder if the trade could recover from that really terrible beef export sale report that we had on Thursday.
Well, it seems like we did. We saw a little bit of selling yesterday, and probably as a result of that, we talked about the very poor market near low yesterday morning and how that would impact the cattle. It also impacted the hogs, as it was a disappointing number as well. But the cash markets, I think, will come back here in the cattle market. That's going to give us some strength. The slaughter pace looks to be as good as last week. Maybe a little bit better if we put together a good Saturday kill. And steer weights were down this week again, 4 pounds. So we're at least 15 to 20 pounds below last year's level. So that's very strong and positive trends for the cattle market and cattle industry. So we look for, cash to gain this week and probably again next week.
Well, to recap where we closed yesterday, we had the live cattle on that April contract going down about 65 cents at 164.80. June was down 97 cents yesterday. I think that's 3 days straight to the downside. Feeders, they made new highs and then closed lower. That was a little ominous. April down 92 cents at 199.15 after going above $200 for a while, and they couldn't hold it. On the lean hogs, like Brian said, we had the April contract 67 lower at 85.07, but the deferreds, ever so slight in their gains, just a little bit. June was up 17 for the biggest gain. That'll give you an idea. All right, well, thank you, Brian, for talking with us, and I hope you have a good weekend out there. Brian Hoops, Midwest Market Solutions, with us here on a Friday morning.